Investment are so confusing. Stock, bonds, mutual funds, everything sound risky.
Hey, what's wrong? Lonely?
I'm trying to understand investing. Every time I look at stock, they go up and down. What if I choose wrong? I'll be finished.
Oh, you know what? It's actually normal. As a starter, you don't have to pick only one company. There's something easier called ETF.
ETF? I've heard about the term, but what is it actually?
ETF stands for Exchange Traded Fund. So, think of this pencil case as a basket. Inside this, there are many companies. And if you buy one ETF, that means you are buying a tiny portion of all of these companies in the basket.
So instead of buying one company, I'm buying many at once.
Yes, that's correct. And that's called diversification. You can spread the risk.
Oh, I see.
So, imagine this blue pen as one company. And if this is not working anymore, then that's your entire investment. But if you have a pencil case with many other types of pens that represent many other companies, such as you have blue pen, black pen, and also highlighter, then if this blue pen is not working anymore, you still have others.
So basically, ETF helps to reduce risk.
Yep.
So you're not just betting only on one company.
Yep, that's correct.
So how do you actually buy an ETF? From bank counter? Some special websites?
No lah, you actually buy it the same way you buy stock through the stock exchange. You can buy it whenever the market is open.
So it's flexible lah. But actually kan, are ETFs halal? Because I don't want to invest in something haram.
You know what? That's the best part because they are Sharia compliant ETF tau. So they avoid something like riba, gambling, high risk companies, also unethical companies. So all the companies in ETF are screened carefully.
Alhamdulillah, that makes me feel more safer. So do you think ETFs better for beginners?
Yep. They are great for those who want less risk, long-term investing, and also if they don't have time to analyze every company.
Wow, I finally understand. Why struggle with one company when you can invest in a whole basket?
Yes! Welcome to Smart Investing!
But how do different ETFs actually perform? Why do they move differently yet?
Let's take a closer look.
ETFs behave differently over time. But why? In this video, we will explore how stock ETF, gold ETF, and multi-asset ETF perform, and the reason behind their movement. Different ETFs move differently because each one responds to unique forces in the economy. Understanding these differences helps investors make smarter decisions. Let's start with stock ETF. Stock ETF invest in company shares. Because of this, their performance usually show high growth potential, but also high volatility. Stock ETF move based on company profits, economic expansion, market sentiment, and also interest rate changes. When the economy is strong, stock ETF rise quickly. During recession, they can drop sharply. But historically, stock ETF show strong long-term growth. What about gold ETF? Gold ETF track the price of physical gold. Gold behaves very differently from stocks. Gold ETF usually show low moderate long-term growth, lower volatility, strong performance during economic uncertainty, and gold rises when inflation increases, the stock market crashes, and investors seek safety. This makes gold ETF a defensive asset. Multi-asset ETF combine different assets, usually stocks, bonds, and sometimes gold. Because of this diversification, their performance is much more stable. Multi-asset ETF offer medium returns, lower risk, and more consistent performance. When stocks fall, bonds or gold inside the ETF can balance the decline. This creates smoother, less volatile growth over time. Why do these ETFs move differently? because each type reacts to different economic forces. Stock ETF move when company profits rise or fall. Gold ETF move when investors fear risk or inflation. Multi-asset ETF move steadily because gains in one asset can offset losses in another. Different driving force, different movement patterns. Here is a side-by-side comparison. Stock ETF, higher growth, highest volatility. Gold ETF, safe during crisis with slower growth. Multi-asset, balanced return with lower risk. Each ETF behave differently depending on market condition. In summary, stock, gold, and multi-asset ETF perform differently because each one reacts to different forces in the economy. So, choosing the right one depends on your goals and risk tolerance.
Wow, now I get it. Investing is less scary with ETF.